So just kicking off just with the playbooks. Once again, the research team has pulled together and we've produced a top 100 and X100 playbook. I'll take you through the top 100 highlights and I'll hand over to Joe to do the X100. So there's a stat in here that I always like to highlight. It always impresses me that Morgan's, we've got coverage of 72 of those names in the top 100, and it gives us coverage of about 88% of the index by market weight. So pretty broad coverage of the largest sort of index in the country. In terms of our previews this period, so we've got previews in there for 56 of those stocks that are actually reporting during August. For those of you that are new to the Morgan's network, these playbooks, they've got individual stock summaries that touch on the key reporting dates, expected share price reactions, company guidance, our forecasts for the period, our forecasts sort of medium term. Three key points that we think you really should be focusing on in investment views and also the risk for each of the different stocks. Right, so getting into the reaction. So of those 56 stocks that we have written previews for, we think that there's going to be 12 of those that will have positive share price reactions to the results coming out. There'll be 9 that will have a negative reaction. So of those positive reactions, for those that just can't see that slide very well, I'll read them out. A2 Milk, AGL, Amcor, Afterpay, Beach, Domino's, Fortescue, Medibank, Newcrest, NIB, Rio and Telstra. And on the negative reactions, it's Coke, Cochlear, CSL, IAG, Link, Origin, Cube, Ramsay and Woodside Petroleum. Interesting little exercise I did there. If you're just looking at that 35 for the neutrals, if we have a look at the top 100 index and we replace current share prices with our target prices, then it comes up with an index valuation of 5071. So that's about 2% higher than where the index closed on Friday. If we throw in what our forecasts are for those top 100 stocks in terms of the dividends, it generates about a 3.5% dividend yield. So we're looking at about a 5 to sort of 6% total return if we sort of do that number crunching. So I think that's probably fairly indicative of why we've got such a large amount of sort of neutral reactions there, a fairly neutral sort of outlook for the market overall. Now, obviously, like Tangi talked about there before, it's not just the historical result that's going to matter, it's also the sort of the outlook going into FY21 and beyond. So we've got to sort of think about what the distortions are going to be for COVID, also for accounting changes to AASB 16 and the likes. But what we've pulled out in our data crunching is just those stocks that are going to have material forecast differences above consensus and below consensus. So this chart here, this is for the industrials, comparing it to FY21 NPAT. I won't read out all those names, but just those that are around about sort of 50% or above where consensus is at the moment. That's Flight Centre, Cochlear, IAG, Afterpay and Ramsay. And that's for the industrials, obviously. On the downside, we're thinking Sydney Airport, Transurban, JB Hi-Fi, Cube and Challenger. Resources also, obviously commodity prices can really sort of throw those numbers around quite a bit, so you shouldn't be surprised that there is major divergence from consensus there. But of the ones that I suppose I'd point out there of the greatest divergence is South 32 on the upside and Oil Search on the downside. Obviously, reporting season is fantastic for sort of unearthing new information and allowing us to recalibrate our thinking, particularly in the short term, but also it allows us to sort of think about how those stocks that we sort of think are best ideas for a medium to long term basis are also going. And that's why we like to sort of continue to highlight our best ideas list. So the number of stocks in that at the moment are 16 names within the top 100 list. This here, I've just pulled out those, just for brevity reasons, I've just pulled out those that have actually got total returns that are above 5%, given where share prices closed last Friday. For those of you that just can't read that table there, it's, the names in that table are Aristocrat, ALS, Amcor, Horizon, Computershare, Rio Tinto, ResMed, Santos and Westpac. Look, my suggestion is print up a copy of the full list of the best ideas. Add your own names to them, keep them handy, keep a watch out for any market gyrations during reporting season. If you see some really good buying opportunities of those high quality names, really get stuck in there. So